Where is crypto going? The latest research on Bitcoin, Solana, and meme coins. Here's the question. Where is crypto going? Not next week. Not next month. Over the next 3 to 5 years. Where does this asset class end up, and how should a rational actor position for it? This paper presents a thesis. Not financial advice. Not a recommendation. A thesis built on publicly available data, observable trends, and logical inference. The conclusion may be controversial. The logic should not be. Let's begin. First, let's talk about Bitcoin. Bitcoin is trading at approximately $89,400. Total market cap around 1.9 trillion. The question is whether this is early, late, or irrelevant. Consider the following data points. First, the institutions. BlackRock's iShares Bitcoin Trust, known as IBIT, is the fastest growing ETF in the history of ETFs. Not crypto ETFs. All ETFs. Ever. In under 2 years, IBIT accumulated over 780,000 Bitcoin, nearly 4% of the total supply that will ever exist. Assets under management crossed $100 billion. Net inflows exceeded $62 billion. Larry Fink, CEO of BlackRock, the largest asset manager on earth with over $10 trillion under management, called IBIT the fastest growing ETF in the history of ETFs. BlackRock doesn't make frivolous bets. They move markets. They are the market. Now, what about the government? On March 6, 2025, President Trump signed an executive order establishing a strategic Bitcoin reserve. The United States government now treats Bitcoin as a reserve asset, alongside gold. The order directs that Bitcoin held by the government will not be sold. It will be maintained as a store of reserve assets. David Sachs, White House AI and crypto czar, described it as a digital Fort Knox. The U.S. government currently holds over 207,000 Bitcoin. The policy is to accumulate more through forfeiture proceedings, not to sell. And then there's the family. American Bitcoin, a Bitcoin mining company founded by Eric Trump and Donald Trump Jr., launched in March 2025. They partnered with Hut 8, received $220 million in funding led by Scaramucci, and secured a deal with Bitmain, the global leader in mining equipment. The company now trades publicly under ticker ABTC. The President of the United States, his sons, his Commerce Secretary nominee, Howard Lutnick, his Vice President, J.D. Vance, all publicly aligned with Bitcoin. This is not subtle. What about the corporations? Strategy, formerly MicroStrategy, holds 709,715 Bitcoin. That's over 3% of the total supply. Their total investment exceeds $54 billion. They buy weekly, every week, systematically accumulating. The strategy is simple. Convert fiat currency into the hardest asset available before everyone else realizes they should do the same. Now let's look at the math. There will only ever be 21 million Bitcoin. This is hard-coded, unchangeable. BlackRock alone holds nearly 4% of that supply. Strategy holds another 3% plus. The U.S. government holds over 200,000 BTC, approximately 1%. Other institutions, ETFs, and nation-states are accumulating. Meanwhile, approximately 19.8 million Bitcoin have already been mined. New supply is cut in half every 4 years during the halving. The most recent halving occurred in April 2024. Supply is fixed and shrinking. Demand is institutional and accelerating. What happens to the price of a finite asset when demand increases and supply cannot respond? So here's the question. Do you believe BlackRock is wrong? Do you believe the president, his family, his cabinet, and his policy advisors are wrong? Do you believe Strategy, which has outperformed every major stock over the past 5 years through this exact thesis, is wrong? If yes, what do they see that you don't? If no, why aren't you positioned accordingly? Now let's move to the second layer. Solana. Bitcoin is the reserve asset, the store of value, digital gold. But gold doesn't run applications. You don't pay for coffee with gold bars. You don't build games on gold. For crypto to fulfill its potential, there needs to be an execution layer. Fast, cheap, scalable, where applications actually run and transactions actually happen. This is the layer 1 question. And for years, it was assumed Ethereum would win. That assumption is being revised. Let's look at the data. Solana processes approximately 3,600 transactions per second in real-time operation. During stress tests, it's hit over 100,000 TPS. Ethereum processes approximately 20 transactions per second on its base layer. That's not a typo. Solana is roughly 170 times faster on base layer throughput. Transaction costs tell a similar story. Solana averages about $0.0002 per transaction. Ethereum averages 10 to 30 cents and spikes much higher during congestion. For a user sending money, buying an NFT, playing a game, or interacting with an application, the difference is visceral. Solana feels instant and free. Ethereum feels slow and expensive, and there's a migration happening. For years, the assumption was that Ethereum would handle serious financial applications, while Solana handled games and memes. That distinction is breaking down. Major DeFi protocols are deploying on Solana. Institutional products are launching on Solana. The infrastructure that was supposed to stay on Ethereum is migrating to where the users are. And the users are on Solana. Active addresses hit 27.1 million in a single week recently, up 56% week over week. There's also a signal in how other chains are responding. Competing layer ones like Sway and Aptos are building bridges to Solana, not replacing it, connecting to it. When competitors build interoperability with you rather than against you, that's a signal. The network effects are consolidating. And then there's Firedancer, a new validator client called Firedancer, developed by Jump Crypto, recently went live on Solana mainnet. It's designed to push throughput toward 1 million transactions per second. In testing, Firedancer handled over 1 million TPS on commodity hardware. Over 200 validators are already running the hybrid implementation, representing roughly 20% of staked SOL. 1 million TPS on a single chain, with sub-second finality. If full adoption occurs, the performance gap becomes insurmountable. So what's the position here? Solana is trading at approximately $127. Market cap around 72 billion. Bitcoin is at 1.9 trillion. The total crypto market is around 3.2 trillion. If the thesis is correct, if Solana becomes the dominant execution layer for the crypto economy, then current prices represent a significant discount to future value. The question isn't whether Solana is good. The question is whether any alternative is better positioned for what comes next. Now, the third layer. Meme coins. Most serious people dismiss meme coins. Speculation. Gambling. Noise. This is a mistake. Meme coins are not incidental to crypto adoption. They are central to it. Think about it. What is the fastest mode of information transfer on the internet? Not articles. Not videos. Not podcasts. Memes. Memes are compressed cultural packets. They travel faster, spread wider, and stick longer than any other form of content. This is an opinion. It's observable in every platform's engagement metrics. Crypto is internet-native money. Memes are internet-native communication. The intersection was inevitable. And meme coins serve a critical function. How does a normal person enter crypto? They don't read white papers. They don't study tokenomics. They don't analyze protocol architecture. They see something funny, something their friends are talking about, something that feels like an inside joke they want to be part of. They buy a meme coin. This is the onboarding ramp. It's not sophisticated. It's not supposed to be. It's accessible. And accessible wins. But there's something deeper happening too. Meme coins are tokenized communities. Think about what a meme coin actually is. A group of people who share an identity, coordinate around a symbol, and have financial stake in collective success. This is the future of community organization. Not just in crypto. Everywhere. Sports teams will have tokens. Fan communities will have tokens. Brands, movements, identities, all tokenized. This is how people will signal belonging and capture value from the communities they participate in. Meme coins are the prototype. Now, most meme coins die. This is true. Over 99% go to zero. The question is what separates the survivors. The answer is simple: the strength of the community. Specifically, the psychological profile of the holders. A meme coin survives if its holders refuse to sell. If they view holding as identity expression rather than investment strategy. If selling feels like betrayal rather than profit-taking. This isn't about the meme itself. It's about who the meme attracts. Which brings us to the thesis. Sigma. The term originated in 2010 to describe a personality archetype, the lone wolf who operates outside traditional social hierarchies. Not an alpha competing for dominance. Not a beta following the pack. A sigma, self-directed, self-reliant, indifferent to external validation. The archetype found its visual language in film characters. Patrick Bateman from American Psycho. Tyler Durden from Fight Club. Walter White from Breaking Bad. Neo from The Matrix. Thomas Shelby from Peaky Blinders. Dexter Morgan. Tony Montana. Tony Soprano. The Sigma face meme, a recreation of Patrick Bateman's expression, has accumulated over 100 billion views on TikTok. The Sigma archetype traces back to 4chan circa 2009. It's foundational to internet culture. This is not a flash-in-the-pan trend. This is embedded cultural infrastructure. Sigma is a meme coin on the Solana blockchain built around this identity. Its origin story is worth noting. The original developer abandoned the project. The community took over. They rebuilt it themselves. This is relevant because it demonstrates something about the holder base. These are not passive speculators waiting for someone else to create value. These are people who took ownership when ownership was available. Now consider the psychology. Consider the psychological profile of someone who identifies as a sigma, self-reliant, independent-minded, contrarian by nature, resistant to social pressure, views themselves as the protagonist of their own story. Now consider the psychological profile of someone who holds an asset through extreme volatility without selling, self-reliant, independent-minded, contrarian by nature, resistant to social pressure, views themselves as the protagonist of their own story. The overlap is not coincidental. Sigma guys are, almost by definition, diamond hands. The identity itself selects for the exact psychological traits that create strong holder bases. This is the investment thesis reduced to its core. Sigma attracts the precise psychological profile that refuses to sell. What about the numbers? Sigma already made a run in November 2024. The price spiked. Attention came. Then it cooled off. Current market cap, $2.7 million. For context, other Solana meme coins have reached market caps in the billions. Bonk, WIF, Popcat, all substantially larger despite weaker identity fundamentals. At $2.7 million, Sigma represents one of the most asymmetric opportunities in the entire crypto market. If the cascade thesis holds, it's hard to find a better risk-reward setup anywhere. There's one more factor. Sigma is an OG Solana meme coin. First generation. If Solana wins the Layer 1 competition, if it becomes the dominant execution layer for crypto, then the original memes on that chain become cultural artifacts. Historical pieces. The equivalent of owning early internet domain names. Or first edition anything. This only matters if Solana wins. But we already addressed that question. So let's put it all together. The cascade. 1. Bitcoin is inevitable. The institutions are in. The government is in. The largest asset manager in history is accumulating. The president and his family are accumulating. The supply is fixed. The demand is accelerating. This is not speculation. It's observation of what is already happening. 2. If Bitcoin wins, crypto wins. Bitcoin legitimizes the asset class. It brings institutional capital. It brings regulatory clarity. It raises the tide for everything built on blockchain rails. 3. If crypto wins, Solana is positioned to capture the execution layer. It's faster, cheaper, and has the user base. The financial infrastructure is migrating. The developer ecosystem is growing. The network effects are consolidating. 4. If Solana wins, Solana meme coins win. They're the culture layer, the onboarding ramp, the communities that will tokenize everything. 5. If Solana meme coins win, Sigma is asymmetrically positioned. It's built on the strongest identity archetype in internet culture. It attracts holders whose psychology predisposes them to hold. It's early, it's cheap, and it's an OG. Each step follows logically from the previous one. The cascade either makes sense or it doesn't. For the record, here is the snapshot. January 24th, 2026. 11:11 a.m. Eastern Standard Time. Bitcoin, approximately $89,400. Market cap approximately $1.9 trillion. Solana, approximately $127. Market cap approximately $72 billion. Sigma, market cap $2.7 million. Total crypto market, approximately $3.2 trillion. This is the baseline. So here is the final question. The total crypto market cap is approximately $3.2 trillion today. What happens when it's 10 trillion, 30 trillion, 100 trillion? Some projections put Bitcoin alone at $1.5 million per coin by 2030. Others higher. Even conservative institutional forecasts suggest significant multiples from current levels. The question isn't whether crypto grows. The question is whether you're positioned when it does. And within crypto, the question is whether you've thought through the cascade. Which assets capture value as the ecosystem expands? Which have the fundamentals to survive and compound? This paper presented one thesis. The Bitcoin layer, the Solana layer, the meme layer, the Sigma thesis. The data is public. The logic is straightforward. The conclusion is either obvious or wrong. Time will tell which.